Well, great afternoon, everyone. Welcome back to my channel. This is Brandon. I've renamed the channel today Crypto Trades and Tech because I'm wondering if there's some value in me sharing my opinion on the intersection between cryptocurrency trading and technology. And today is my much anticipated ADA Cardano video. I'm going to call this part 1. Because I'm going to try to keep the technology pieces at a very high level, what we call 200,000 foot view level, basically the International Space Station level. And I'm really going to talk about the intersection between the investment thesis and the technology, and really why I'm excited about Cardano for this particular bull market and altcoin cycle. So let's just get started. So why do I like Cardano? Well, first of all, in this cycle, what we're looking for right now today are cryptocurrencies that are going to outgain BTC or Bitcoin substantially. If we can't identify cryptocurrencies that we think are going to sustainably outgain Bitcoin, then we might as well just buy Bitcoin. Another thing I want to clarify is that a lot of people think that because I like Cardano, I think it's an Ethereum killer, quote unquote. I do not think Cardano is going to overtake Ethereum. Let's just leave it as simple as that. I think Ethereum 2.0 will be successful, and I think Ethereum will have probably the major adoption in this space for some time to come. Now, could it in time take over? Yeah, sure. There's a bunch of projects that in theory could take over Ethereum. But that's not what I'm looking for. That's not why I'm interested in this name, okay? Why I'm interested in this name is when you look at things like, I've got the chart up here, first of all. It's got a pretty good looking chart since the beginning of 2020. We're up on the US dollar and Bitcoin. So up on Bitcoin here and up more versus the US dollar, right? So it's got a decent looking chart. It's obviously got some traction as far as the market's concerned and investors are concerned because its chart looks appealing. Compare that with maybe another project. It's possibly the strongest contender, the other contender in the Ethereum space, EOS. A lot of people talk about EOS. You look at its chart versus Bitcoin, and it's just been losing. And so there's that intersection between technology and investing. This chart doesn't look as appealing. The market isn't as interested in this project right now. Since 2020, it's been nothing but down versus Bitcoin. Well, there's a lot of reasons for that we're going to dive into. But when you think about it, when the hype really starts to happen in this altcoin cycle, what people are going to be doing is they're going to look at $50,000 Bitcoin or whatever it is at the time and say, you know what, I want to get involved here, but I can't afford Bitcoin, right? And I don't want to buy a fraction of a Bitcoin. And they're going to look at Ethereum, and it'll probably be up maybe north of $1,000 by this point, a couple $1,000s. And they're going to look at that and go, you know what, I don't know that I really want to spend. Maybe they only have a couple thousand to invest. I don't want just to buy 2 or 3 Ether. That doesn't seem exciting. And then they're going to look at other projects. They're going to look at like the ADAs and the links. And Link may be approaching $40, $50 by that point. But ADA is still going to be well under $1. And people are going to go, man, I can buy 1,000 ADA or whatever it might be. So from just a pure hype standpoint, that's where people that are getting in late in the game are going to look for things that they can afford and they feel like they have some stake in. ADA's market cap, it's a fixed asset. There's I think 45 million ever that will be ever minted of ADA. I think we've got 11 billion supply today or something like that, or it's more than that. Oh, this is the volume here. But nonetheless, its market cap is right $4 billion right now, right? 4 to 5 billion lately. So it has a lot of room to go to catch up with, Ethereum's at 60 billion. So it can 10x and still be behind Ethereum, right? But Ethereum's obviously, its market cap's going to grow as Bitcoin's balloons here. But it's also a project that has enough attention. It's up in the top 10. I really want to focus my attention on things that are really in the top 20. A lot of these things down here are going to be really big pump and dumps, and those are much harder to grab. I might play a few of those in very small trades, but as far as like actually buying and holding for any amount of time in this cycle, I want to be up here buying these coins that have more market interest at this moment in time. All right, so that's the basics there. Now let's talk about why Cardano technically. So first of all, there's this Vitalik of Ethereum. He brought up this blockchain trilemma of scalability, security, and decentralization. And so the Cardano Foundation, or really Charles Hoskinson and his partner, they see a couple of those, security and decentralization, as fundamental to any sort of decentralized blockchain, obviously. And so they want to address scalability, of course, but they really also want to try to solve some other additional problems. That is, so their focus is on scalability, interoperability, and sustainability. And they've spent years rethinking the problem, redesigning the architecture, and developing solutions right the first time. So I was trying to think about how to organize this conversation we're going to have today. And what I did is, they have this Cardano roadmap here on the on Cardano.org. It's a really good place for us to start. And I'm just going to talk through these different roadmap elements, where we're at, and what the technology is. But you see here, what they're saying here is what I was just saying, is that in 2015, they began with the vision to address these three principles: scalability, interoperability, and sustainability. So after a bunch of work and research in 2017, the project really began. And the architecture really started with its foundation. It's a modular architecture, and there's really two layers: SL, or the settlement layer, and then the CCL, or the computation layer. Now, all this is coded in a programming language called Haskell, and I might talk more about Haskell later. But Haskell is a very efficient programming language. The way it's built for mathematics, it can compute things mathematically very quickly. It also allows for 100% provable mathematic outcomes. So if you have an assumption about the way something should work, you can mathematically prove it with this language, which is very important for security and for scalability. So again, they started with this modular architecture. Now, let's talk through where we're at today. So they rolled out Byron, and then now, earlier, or a few months ago, later in 2020, they rolled out Shelley, which you can see here is titled Decentralization. Now, you've probably heard a lot about proof of work versus proof of stake. A lot of blockchains moving from proof of work, which would be what Bitcoin and Ethereum are today, to proof of stake, which basically means instead of computers competing to solve a complex mathematical problem, and then the computer that solves that mathematical problem the first is the one that's elected to be the one that mints that block, basically. Now this is done through staking. So nodes that want to be selected have staked currency, and there's a random element to select who is going to mint that next block. And so this has been rolled out. Today we're on something called Ouroboros, the Ouroboros Consensus Protocol. So this is what Shelley rolled out. It's now called Ouroboros Classic because there's some improvements to it, but this is Cardano's proof of stake implementation. So when we talk about consensus, this is part of that proof of work or proof of stake. What we're trying to do is get the whole network, everybody that's involved in the network, to agree to the outcome of something. So for a particular block, we want to all agree that whatever transactions occurred in that block. And so the method for making sure everybody agrees to what was in that last block and what that last block should be is to elect somebody to basically lock up that block and then share that and sign it cryptographically and then share it with the rest of the network, right? So what Ouroboros does is it's a consensus protocol, but it divides the blockchain into slots and epochs. So each slot lasts for about 20 seconds, and each epoch, which is an aggregation of slots, represents about 5 days worth of slots. And so this breaking this up into smaller segments helps with scaling. But on the proof of stake network, again, it's mathematically randomized as to who is the one selected, what validator node is selected to lock up that slot, the slot leader. And there's a lot of more technical details. I'm trying my best not to be too technical on all this. So, but when scale with So that's the first part of scalability. That's where we're at. So we've now reached the Shelley era. That's been launched. Ouroboros has been launched, and we are the proof of stake and the staking has been going on for a couple of months, and we've all of us who've been staking, who have been getting our staking rewards, and it's been working rather well. There's been a few hiccups, namely with a couple of wallets that have been having some little hiccups here and there, but it's growing pains. But the core network has been operating just fine. Okay, so the next stage that is a significant step forward is Goguen, which is launching smart contracts. And you'll hear me talk a lot about this. I'm going to skip this for now. We're going to talk more about that here in a minute. But the smart contracts are not live today on the network, so just know that. But when we talk about what's unique about Cardano, Basho and the scaling elements are really what are going to bring the uniqueness. Now, note that all 5 of these roadmap items are being worked on in parallel. So this isn't a serial, we do the foundation, then decentralization, then smart contracts, then scaling, then governance, or Byron, Shelley, Goguen, Basho, Voltaire. No, they were working on all these in conjunction, but the plan was they have a plan for all of these, and so they started with Byron in 2017, Shelley came in 2020, now the rest of these are going to come really, really fast because they've got the core foundation in place, and all 5 of these work streams have been going in place, and it's just a matter of layering on the elements on the live mainnet. So, back to scaling. Now, how is Cardano going to scale to really change the paradigm around cryptocurrencies? And what we're talking about here, if you think about Ethereum, obviously was what people call blockchain 2.0, which allowed computational elements in the blockchain. Or really what it did is Bitcoin has a scripting and shell language and some ability to do some calculation and computation on the blocks on a chain, but it doesn't allow for looping. It's a very, very limited scripting language, and so by not allowing looping, it's a security mechanism, and so it's not highly programmable. But Ethereum, its programming language, allowed for looping, so full programming capabilities and computational capabilities, which allowed for smart contracts. Okay, so when you look at what's like this Cardano calls what they're trying to do the 3rd generation blockchain. And what's fundamentally different about the 3rd generation blockchain from second? Well, it's the ability to scale up to do everyday transactions. So Bitcoin everybody can't switch from Visa to Bitcoin. It would crash the network, right? And nobody would get any transactions through. You can't even use Ethereum for that same thing, right? So Ethereum layered on the ability to do computation and thus smart contracts, but it still doesn't scale. So now the 3rd generation blockchain has to be able to scale to the likes of a Visa processing system while being decentralized, while still being secure, and while allowing computation. So the next really rollouts of things to come for which they've already been started. It's already started in mainnet, but the rollout of Basho is going to help to increase the number of elements in this. So the first thing with Basho is going to be the rollout of Oroboros Hydra. Now, Hydra, that's the next evolution of this Ouroboros consensus protocol we talked about. Hydra specifically is an off-chain architecture that addresses some key scalability challenges. That is high transaction output, low latency, and then minimal stores per node. So when you talk about scalability, it's not just transactions per second, it's network scaling, reducing bandwidth, and data scaling, reducing the data required, right? And so Hydra introduces a multi-party state channels, which offer the ability to perform parallel transactions and instant confirmations. And so early simulations show that per head, which is how the grouping is with this, is that we can do about 1,000 transactions per second per head, and you can layer on about 1,000 heads into Ouroboros Hydra, which gives us about 1 million transactions per second. So that's quite a bit. That's far more than the Visa payment system today. So just know, so they've got this well thought out. It's well along the way in development. Once Goguen rolls out, Basho is not like a single thing that's going to be it's released. It's going to be a series of events that enable greater and greater and greater and greater scaling over time. And so the other part of this is network optimization. So there's a network architecture developed by John Day at Boston University called the Recursive Internetwork Architecture, or RINA. And really, at the end of it all, it's an overlay on top of IP, so it's built on the core internet, but it's better suited than TCP, which is what's layered on top of IP today, for decentralized applications. And it optimizes how decentralized applications communicate, and it focuses on inter-process communication. So today with TCP IP, we're focused, we build a handshake between two nodes to allow data to be transacted. Whereas really what's happening with networks, that's a very client-server model. With inter-process communication, especially in a decentralized application, it's focused much more on optimizing how the application as a whole talks, not just allowing two clients to transmit data between each other like TCP does. I may be getting a little bit too technical here. I'm trying to keep it, again, dumbed down. All right, so now back to the important stuff. Goguen smart contracts. It's coming first quarter 2021. And something about Goguen is that it's coded at the programming language for the contract language is called Plutus, which it looks a lot like Python. So it's going to make development, people that know Python like myself, so I'm a network person, right? So I work in data networking, with Cisco and stuff like that you would have heard of. So what we do is we allow the internet to work and things like that. And a lot of us on this side use Python for scripting. Now we don't do full program. I don't write programs and full-on development, but I do a lot of scripting to automate things. And I use Python. And so a lot of us in this industry use Python, and other related industries use Python for things like this. And so Python's a very good scripting language. And at the end of the day, that's what you really need, is a scripting language for these smart contracts. Let's move down here so you can kind of see while I'm talking. So again, it's that smart contract language is Plutus, and then on top of Plutus is something called Marlowe. Now I'm just going to show you here. This is the Marlowe playground. So IOHK, or Input Output Hong Kong, is the company that does most of the development for Cardano. And this is something that they put out here. It's called the Marlowe Playground. It's really neat. This is a really, really big differentiator with Cardano. All right, so I'm just going to read this to you because I have a hard time just explaining it. It says Marlowe is a special purpose language for financial contracts on Cardano, allowing contracts to be written in the language of finance rather than using a general purpose language on the blockchain. Because it is a special purpose, it is easier to read, write, and understand Marlowe contracts. It's also safer. Some sort of errors are impossible to write, and we can completely analyze contract behavior without having to run a contract. All right, so again, so that's what Marlowe is, and I'm going to show you this. This is something really neat with Marlowe because of how it's built. They've layered on like a GUI basically. So I'm going to go to this right now. This is the Marlowe playground, and I'm going to go use what's called Blocki. Okay, and I think in a recent video, I'm not sure which one it was now, I gave the example of what a smart contract is. So if I wanted to make a wager with Jordan, right, and I wanted to say, I thought the Cowboys were going to win, and maybe he thought the Patriots were going to win. I don't know who Jordan's favorite football team is, but if he thought the Patriots were going to win, we could write a smart contract that says that if the Cowboys scored more, then he would pay me an Ethereum and vice versa. All right. So what I've done here is I've built that entire smart contract, which would be pages and pages and pages and pages of programming language. It would be me going, and the reason I use this example is because to get this data right here, Cowboys score or Patriots score, I would have to go use some sort of API. It was the link video. I'd have to use an API from some website to pull this data down. And so within the ecosystem of cryptocurrencies, I can use Link to quickly pull this data. So say I'm using Link to pull the Cowboys score, the Patriots score, see who won, right? All right. So what I did is I just use these little building blocks. So there's contracts, observations, actions, values, the payee, who's getting paid, parties involved, tokens, and boundaries. All right, so what I did is I dragged the contract onto here. Now let me just show you how this would look. So if I wanted to build a new type of a contract, I might be able to start to layer in a contract with multiple elements, right? I can snap in a payee here. Let's put in the payee. That's a role. I want a payee. Payee. There we go. Party. All right. So party, and I can put, there you go. Right. So so you just snap these elements together instead of having to know programming. I don't have to know any programming at all, and I can build this smart contract. What this smart contract does, it says if the Cowboys score less than or equal to, I guess I would have to change that to just less than. If the Cowboys score less than or equal to the Patriots score, the payee, Jordan, will receive 1 ETH from my key. So his public key for his wallet will receive 1 from my key, right? And so if that works out, then we close the contract, we're done. But if, sorry, my dogs went crazy there. Okay, so I had to go deal with that. All right, so you get the idea though. I can build this smart contract with just some little blocks here using this Blocki. Great, you just saw one of my editor to build out this contract. So if you think about what this means, now this might be more impactful than a lot of the other technology stuff I talked about, and this is really one of the biggest reasons I'm bullish on ADA, is this type of innovation is going to allow, a new financial analyst that was just hired by, some big financial company to start to build smart contracts. It could probably take an hour course. It took me probably maybe 5 or 10 minutes to put all this together, right? Now, actually, to make this work, to go get the scores and the keys, and a little bit longer, but I put together the structure of the contract in 5 minutes, maybe. So, with a couple hours training, an intern that just got out of financial school can start writing smart contracts, not knowing anything about technology or programming, right? And so this is going to enable just much more rapid adoption of this technology. So getting back to what's the point of us looking at, I said at the beginning we're trying to find assets that appreciate versus Bitcoin, and I'm pretty sure that assuming Ethereum 2.0 goes well, Ethereum will outproduce Bitcoin. So we can probably just pretty safely buy Ethereum. However, the other part of this is that Ethereum 2.0 might not go well. It might be a hot disaster. It's extremely difficult to take an established technology with a bunch of users already on it and make drastic fundamental changes to the underlying technology without upsetting the apple cart. And so if they're unsuccessful in actually doing this, in getting, if Ethereum is unsuccessful in getting 2.0 rolled out in a smooth manner, well, what's going to happen is developers and the industry at large is going to look for alternatives. And really the alternatives today are ADA, EOS, Algorand. I threw down here Zalika, a few others. There's several other platforms that could be competitive. But the other thing we need to look at is who is realistically the most likely to compete with Ethereum, and who also, besides that, is going to generate the most hype this year. So with all these other projects, EOS, Zalika, Algorand, a lot of these projects, they really burst out the gate. They had a really good idea, and they burst out the gate building everything on one idea. The main difference between EOS, Algorand, Zalika, and Cardano is that Cardano doesn't have an idea. They have a whole string of ideas that they're going to put together in one full platform. So whereas, and Tezos is another one, right? So Tezos, for example, came out the gate. They were one of the first that actually had a working proof of stake network with their baking. And so they got a lot of hype early on. EOS has this delegated proof of stake, which allowed them to roll out a little bit earlier, where you delegate. It's 21 nodes that actually do all the validation, and everybody else, it's constantly voting on who gets to do that. So there's difference in the technologies, but they had an idea, but they don't have anywhere near the momentum that Cardano does with multiple phases of things. And for example, I'm going to show you this last little thing here. When you want to evaluate technology projects, by their adoption, the developer community is critical. And when you look at who is getting the most done and who's getting the most interest from the development community, here is, Crypto Differ's top blockchains by average daily development on GitHub. This is in the year of 2019. All of 2019, you see that it was Cardano, ADA, had the most development activity, followed closely by Ethereum, and then everybody else is way down here. They're not getting the same development, and they're not making as nearly as much progress. So some names that you'll be familiar with down here. You got Cosmos and IOTA, which used to be my pet project, and EOS, right? And so the question is, was this just 2019? Well, if you go forward to this year, this is the last one I found from them back in June. I don't know if they've not done updated one, or I just can't find it. But Cardano is way in the lead. So not only is it that they have a lot of unique technologies, but they also have a lot of provable progress being made. The other thing is that they are extremely transparent. A lot of the other projects that you hear people talk about that are potential competitors to Ethereum, they are far more secretive with what they're doing and how they're doing it than Cardano is. And the Cardano Foundation and IOHK. And so that's another big thing for me, and a big red flag. A lot of these, it's like, EOS had to pay the SEC, I think, recently, several $1 million for kind of how they did their ICO was a bit sketchy. And there was a bunch of drama with that. So the other thing about Cardano is that they've taken their time to get the regulation figured out really, really well. And so one of the things that, we go back to their main foundational principles: scalability, which we talked a lot about the tech of the scalability; interoperability. So they want to be able to interoperate not only with other blockchains natively, they want to build really good interoperability, which again, if they're successful, it's going to make projects like Polkadot, struggle, because when you have a platform that natively interoperates with the rest of the blockchain without having to have an intermediary, why would you use an intermediary? And then the last part is sustainability. So something else that Cardano's done is that they have this concept of a treasury, where the treasury is what's used to, and I think they talk about this under governance here. The treasury is what's used to fund future development. Yep, here we go. Voltaire will also see the addition of a treasury system whereby a fraction of all transaction fees will be pulled to provide funds for development activities undertaken following the voting process. So, they've thought through every element of this, so that way, a lot of these other projects kind of got in hot water because they had these big ICOs, and these ICOs they're of no substance. It was just a white paper and some hype, and boom, they raised billions of dollars. So, but is that really sustainable over the long term? If you get a couple $1 billion up front, but you're not really incentivized to execute, other than you don't want to get in trouble, what Cardano is doing is forcing even the main IOHK to compete with everybody else in this voting process for funds to develop the next phase. And so the community will, after this initial deployment is done, will have full control over where the funds are spent. So on that last little note here, if you look at their status updates, the daily updates and the information they provide to the community through multiple avenues is just far and away more transparent, and they provide far more information than other projects that I've seen. Now, there's some other good projects. I don't want to say that the other projects aren't good at all. There's some really valid things, but when you look at back to the investor thesis, when we look at what project has the ability to, outgain Bitcoin primarily, right? So what do you need to outgain Bitcoin? Well, you need a little bit of hype. You need, for the common person to come in, seeing something that's affordable, that they don't have to spend thousands of dollars on to get one token of, and things like that. So there's a lot of potential for it to really, really spike. But beyond that, we need substance. right? And it can't just be a one and done thing. So a lot of these other projects, what I see is them having one great idea. They were the first to do this one piece of this, you know, maybe one of these elements that we've talked about here today. They did one of these elements well, and they were the first one out the gate, but they don't do any of these other elements very well. And so if Cardano is successful in rolling out all of these elements well, they will be the only platform that has anywhere near these types of things implemented across the board. The other part of it, so, you know, Ethereum 2.0, Ethereum's probably going to do very well versus Bitcoin this cycle. However, Ethereum has its own problems, namely scalability. And as Ethereum 2.0 gets rolled out, if there's any hiccups with Ethereum, well, I want to have, at least if I own Bitcoin and Ethereum, I want to be hedging my Ethereum with something that can take advantage of if Ethereum stumbles, right? So if Ethereum stumbles at all with ETH 2.0 rollout, people are going to look at these other platforms that are going to start to gain traction, and they're really going to pump. So probably all of them will pump a little bit, but who's going to be the clear winner out of this? The other thing too is when you look at, again, a lot of these other projects have been one and done. They had their hype already, they've had their spike already, and you can see on the charts, a lot of these other projects are just in decline on the charts. They're not looking very healthy. Why is it that a lot of these other projects that came out at the same time, now Zalika's got a little bit more traction here lately, why did these other projects that came out around the same time that Cardano did, how come they have been just in a downtrend, whereas in 2020 specifically, now, you know, obviously they spiked a little bit here, did ADA, but in 2020 specifically, ADA is picking up steam. Why is that? Well, it's because there's lots of opportunity for it to gain hype, because there's so many different launches, so many different things coming out, it's multiple parallel work streams, that it'll continue to get, this was the Shelley launch that caused all this hype up here, right, for ADA versus Bitcoin. And here was just the beginning of alt season. So when we get that Goguen launch, if Shelley did this over here, what's Goguen going to do? And then once Goguen goes live, if Ethereum has any sort of hiccup with 2.0, then it's going to be a boon for these platforms. So that's I'm 32 minutes. This is way too long, but that's my thoughts on why we should all be like looking at ADA specifically, and why I have ADA over these other platform potential Ethereum 2.0 competitive platform tokens. Why I'm looking at it over these other tokens. So I hope you guys found this video successful. We'll call this part one. I might make another one to dive into some more of these details in segmented videos, but I wanted to get this video out and just share my thoughts. Thanks, guys.